All right, guys. Welcome to episode 100 of the We Talk Money Show.
Woo!
And we couldn't have a better guest than Carter Thomas today, man. Thanks for joining us, buddy.
Yeah, my pleasure. Thanks for having me.
Yeah. So, dude, so
it.
much to catch up on. I assume a lot of people that listen to the show know who you are, but for anybody that doesn't, maybe we can start by just giving a little bit of your history, what you're doing, what you did in crypto, what you're doing now. And then we can hear your predictions and tell us exactly what to buy that's going to go up 1,000% in the next month.
Exactly what dates, what levels, stop loss, target, the whole thing.
Come on, Carter.
Perfect. I mean, I was like an entrepreneur for a long time. I was doing starting my own businesses in the iPhone app world. That started to die. So I heard about this crypto thing. Actually, Chris, you're the first guy I've ever reached out to. And I said, hey, man, like, what's the deal? And to your credit, you wrote me back and were very friendly and helpful. You had no idea, we never met each other. And I bought all this Ethereum and everyone I talked to had no idea what was going on. They're like, it was just, everyone around 2016 was just, no one knew what was going on.
Yeah.
And I was like, there's got to be a way to figure this out. So I went home one day and just like turned on a webcam and said, well, if no one else knows, like, I'm going to figure out and just record myself. And I started doing this and it got pretty popular. I started this YouTube channel called Coin Mastery, podcast, email newsletter, whatever. It got really popular. And then the whole bull market happened. It was just wild. Some funny stories about like the day of the top, which we can get into if we need to. And then, it started to die off and I just realized I can't live my life like putting out this much effort only to watch it just disappear every 4 years or whatever these cycles were going to be. So I started learning about trading and futures markets and figuring out how that works because, it's a long-term business. And fast forward to now, I've been doing it ever since 2020, 2021. I kind of stopped that, went all in on crypto again, just because it was like so unbelievable, so much fun. But now last year I didn't do too much, kind of took a year to chill and travel a lot.
Nice.
Yeah.
Mini
retirements, just get healthy, have a good time. But now I'm back into it. I'm trading pretty much full time and I love it. I'm having a great time.
So what have you been trading more recently and what time frame and what strategy and what's been your approach and how's it been going?
So, I found for myself, I do so much better when I just find one thing to trade. And so for me, it's the NASDAQ. It's NASDAQ futures, NASDAQ ETFs. I don't really do options. Like maybe once in a while I'll do a couple options trades, but that's really it. And I take all of that and those profits just get sent to one to three buckets, right? It could be some crypto, it could be some long-term, just buy the S&P 500, could be in the money market funds, but the profits just get sent out to these buckets. And I find that when I study one thing and I get really good at trading that one thing, it's a lot more fun. And you get to learn, you get to feel the flow of the asset itself. Some people do that really well with Bitcoin or Ethereum, or sometimes with altcoins. Some people do it with gold or crude oil or whatever it may be. For a long time, I would wake up and I had 30 things on my watch list and I was looking at hundreds of charts and it was just so hard for me to get conviction around it and really be able to make consistent money doing that. So for me now, it's all about the NASDAQ. That's really all I do.
So are you day trading, swing trading? What's your typical hold time? And how many trades a day, week, or month are you taking?
It's a little bit of everything. I would say definitely some day trades. And those can be anywhere from 5 minutes to, an hour or two. Swing trades can be a couple weeks, a couple days, kind of just based on different levels and momentum and things that I base all of. And I have very, very specific setups. So it's everything has to line up. I'll take that one trade, get in, get out. That's it. I find that I don't really hold. I'm much less hesitant to let things ride than I used to be, for better or for worse. It's just I've approached this mentality the last few months. It's just I'm going to hit it hard. When it hits my levels, I'm out. That's it. And if it goes and runs longer, that's my own fault. I'll figure out another time. But I just trade setups day in, day out. I don't really try to make investments or swings or I'm not trying to bet on what's going to be around in 10 years. I'm just like, just make money for now and figure that out later.
That's the beautiful thing about active trading, right? Like a lot of people look at it and they're scared of it, right? Rightfully so, because a lot of traders lose money. But the beautiful thing is like if you have a systems based approach or like a rules based approach, there's no emotion, there's no subjectivity. You remove all that and you just follow a plan. And if you do it effectively and you have an edge, you can make a lot of money doing that, right?
Yeah. No, it's so true. It's like, I think that's it. Like having an edge, having a system. I think that what I've learned is you really need to have a very, very, very solid system. And it can be very simple, but you have to be able to trust it to the point where like you can rely on it when, even if you don't feel like it's going to work, you got to be able to like see it through and know when to take a loss and when to cut your losses and whatever it may be. And that's something in crypto that I find to be really hard, other than swing trading, where it's like, it's really hard to have a provable edge over the long term. Like it's really just hammering things as hard as you can and hoping a few, like some of them work out in the best way possible. And then, you know, knowing when to stop or whatever it may be, which is great during bull runs, obviously, but bear markets, that makes it a lot more difficult.
Yeah. The edge in riding crypto waves is the dumb money, right? It's the massive volatility, it's the massive growth, it's all the capital flowing into the ecosystem, gives you the ability to hold for longer. But when it comes to like trading relatively efficient markets like the NQ, right? Like the E-mini futures or the micro futures on the stock indices, those are wildly competitive. And like, yeah, to be able to actually make money in those, you have to have a rules-based approach. If you had to describe like your style of trading, like, are you a trend trader, a counter trend trader, scalping volatility? Like, how would you just describe it, I guess, in like one sentence?
I would say it's mean reversion, liquidity based mean reversion. So one of the like, there's obviously a lot of things about algorithmic trading that's made things more competitive, but one of the things that has actually made it easier to trade is the fact that these algorithms seek out liquidity pockets in the market, because you can move price through thin parts of the market a lot easier. And anyone who knows much about charts can see these, right? It's when you see like big gaps, or when you see a candle that's just like very vertical with a huge tail on, or something where not a lot of trades happen, but the price moved a lot. And what these algorithms know is like, if I can move price back to that level, it's going to be a lot easier than trying to push it through where all these other buy orders are. That's kind of broadly speaking about it. And so when you can get a system that shows you a few different factors, and then you can look at the chart and determine where these levels are, you're essentially riding the coattails of these algorithms, where you know that they're trying to push price to this level, and you can ride that with them and then get off as soon as they're off and let them figure out what the crazy shit's going to be. And then you do it again. So I would say that's like the easiest way to describe it.
And are you trading like market open, first 2 hours volatility, or throughout the day, or what's a typical day look like?
It kind of depends. Sometimes when the market opens, you see these huge inefficiencies in the market, and you can make bets on them. Like that's actually really good for options. Like a lot of these zero data expiration options, like that's, in my opinion, the only time it's ever worth even trying this stuff is when you see huge numbers pointing one way and the market's going the other way. You know, you're going to see some sort of reversion. But I personally do not like big volatility with futures. Like it's so hard to think clearly. The leverage is just, it's just nuts. Ridiculous. It's like, it's all of my biggest losses come when the market's just moving so fast, because it's so hard to think straight when things are going that fast. So the first hour, yeah, there's a lot of volatility, but I find that it's a lot easier when things calm down, and you know, you can breathe a little easier and like, you know, make the same amount of money. It's just a lot less stressful.
Yeah, low stress. Go play some pickleball, or in your case, what do they call it? Like beach
tennis down here. Beach tennis, paddle tennis. It's great, man. Dude, it's like there's like all these professional players down here. It's like it should be the national sport or something. It's super fun. There's a lot of good athletes playing.
I was gonna say, watch out, because that nice little mark on Travis's forehead came from playing pickleball. You know, these sports, they can be dangerous. People are like, pickleball is for senior citizens and old people. That's not true. It's cutthroat sport full of youth too.
Yeah, it gets intense. I whacked myself with my own racket over the weekend and almost concussed myself.
We're laughing. It's not funny, but it is. Now that it's done, we can laugh about it.
Yeah. Because he didn't die, we can laugh about it.
That's right. That's right.
Austin's a big. Aren't there like a bunch of pro players in Austin? It's like
there are,
championships and stuff there.
Yeah.
We'll come down there and we'll get in your realm, man. We'll get on the beach and try to whack some balls around.
Yeah, exactly.
I was gonna say, to Carter's point about how he's focused on the NASDAQ, when I started in stocks and futures, I basically was day trading stocks. And what I noticed was a lot of people got way too caught up in trying to catch every single move, every single type of stock, all of that. And that's what can get really overwhelming for traders. So I like how you focus on just one thing, particularly the NASDAQ. You're learning how it moves. I think a lot of people listening could probably learn something from that. And because of the simple fact that how overwhelming it can be when you're starting out and wanting to catch everything. It's like, just focus on one thing, even if it's like biotech stocks, if you're trading, or specifically like you did with the NASDAQ or an index ETF. I think that that's a helpful thing to get you going. And then once you master that, you can kind of branch out from there. So I liked that idea of you doing that.
Yeah, I think it's also when you're trading for income versus trading for like a portfolio, it's two different worlds, right? And I think when you're trading for income, if you spread yourself out too thin, at the end of the day, you're just like, why am I not just swing trading the S&P 500? Like if you're not beating the S&P 500 or whatever your benchmark is, or Bitcoin or whatever you're trying to beat, why not just like double leverage on Bitcoin? Like, it's good to always ask yourself these questions as opposed to trying to find these home runs, because if you don't have an edge, inevitably your beta is going to end up being just as the same as what it would have been if you just held the beta asset of the asset class.
And it's funny how you kind of went from crypto to day trading futures, because I kind of went the opposite way, right? Like I was day trading futures for a long time, and then I went into crypto because at that point in time, like around like 2013-ish, when I was really looking at Bitcoin, it was like, man, the volatility is shrinking, the volume is shrinking in the indices, and the competition is going up. And I looked at Bitcoin and I was like, man, this is such like a wildly volatile asset where I feel like there's no professional traders in here. So that's why I focused on that. What was it that was attractive about the futures markets in today's environment? Because I haven't day traded futures in a long time. And like, do you feel like it's still a good market to trade? Do you enjoy it? Do you notice the algorithms playing games? Would you recommend it to other people? Or is it something that you feel like you just have a very specific edge in?
Well, there's a few different parts of that. The first thing I would say, what you just said is exactly what my buddy said, who was a futures trader who came into crypto. I met him in 2016, 2017. And he was like, dude, after trading futures for 10 years, this is unreal. Like, this is the easiest thing I've ever done in my life. And so I can appreciate that. I mean, I don't remember what it was like trading back then, but like, I would probably do the same thing if I was in your position, because it was just it was so easy to make, just like in a liquid market. I think trading futures, it's very, very competitive. It's very hard, like emotionally to do it, because like the numbers are just big. It's kind of like trading on BitMEX, right? The first time you do it, you're like, what the fuck this is crazy. But then you start to realize, okay, there's gotta be something here. And then when you figure out a proven system that you can have discipline around, it can be good. I would not recommend it to most people, because it's so tantalizing, right? The amount of money you can make and lose, obviously, you're just like, oh my God, I can taste it. It's like that feeling of the crypto bull run every day. You're just like, if I just get that one trade, I'm going to make all the money I could ever need. I just need to hit one. Like, it's that mentality. And that's exactly the kind of person that just gets, crushed. versus other people that I've met who have traded futures, or who are like, I want a disciplined system. I'm not going to let this get ahead of myself. I want to take it day by day and know when to cut my lot, like have a very proven system and all that sort of thing. It can be very helpful for them as well. But man, it is just, it's probably the most competitive thing you could do. I don't know how many other, maybe like professional sports, but like you're just going head to head with the smartest people in the world to make money.
That's how I've explained it too. It's like nowadays in the futures markets, you've got the most high level PhD mathematicians working on stuff. And I was like, for me, I'm just going to outsource that to some managed futures funds. And like, last year they did about 60%. So I'm like, hey, could I do better if I sat down and watched the computer all day, every day? Maybe, but like the return on my time is what I'm thinking about now. And
Right.
so I always like to talk about and look at like different ways to attack the markets, because there's so many ways to build wealth, right? And there's not a right or a wrong way. It's like, what way can you stick to and what way fits your personality? Because the thought of sitting there and watching the futures markets for hours a day now, it gives me like, I can feel my blood pressure already starting to rise because I know how intense that shit really is, right?
Yeah, totally. Yeah, I like to tell people it's kind of like being an entrepreneur, but it's a little different, because as an entrepreneur, there's no ceiling and there's no floor on what you can make. Like you can make as much as you want. And when you're trading, it's like if you go to work and you do okay as a trader in futures, nothing happens. Like you don't make any money. Like you go home flat. That's a good day. If you do exceptionally well that day, you make money. If you do poorly, or you do like a little bit below normal, you actually lose money. And as an entrepreneur, it's like, if you don't do well, you can just come back the next day and hustle harder, and like eventually you'll make it up. But you don't actually lose money if you make a bad YouTube video. Like it's just, you don't make a good one.
Yeah.
Yeah.
There's like time. Yeah.
Yeah. And so I tell people, like, does the idea of, so like, I love tennis. Does the idea of going and playing a semi-pro tennis player every day excite you if when you win, you make $20,000, and when you lose $20,000? Like, does that make you excited to go become a great tennis player? If the answer is yes, this is an interesting business for you. If the answer is no, which for 99% of people, it's probably not that interesting, this is not for you. But like, for certain psycho like people like myself, it's great. So
I also think like you have to have the mental strength to be able to do it. And most people don't want to take the time to train their mental strength when it comes to trading. And so I know that you're a very mindful person, and that probably comes a little bit more naturally for you than the majority of people.
Right.
Because it is a mental game.
It's definitely a mental game. It's an emotional game. And like Chris said, it's like sometimes I at the end of the week, I'm just like, what the fuck am I doing? Like, why do I do that? Like, this is the stupid. Like, why am I not like traveling around the world doing something way more fun, doing YouTube videos? Like, what am I doing? And
why am I punishing myself this way?
Yeah. I'm like, what is wrong with me? And the only thing I could tell you is just like you said, Nikki, I can't, like, this is what I'm supposed to do with my brain. Like, this is how I think. This is the only thing that like I found where I'm like, this is where I'm supposed to be. And it's like, I just have to do it.
I bet
for whatever reason.
Travis, you can probably relate to that in the way you do things. Like maybe you're not day trading futures, but you're doing this stock market research that's very deep, and you're diving into these financial statements. Most people probably would look at you and say you're crazy, right? But like you've got the brain and the mental strength for that, and you find it interesting. And I would say a lot of people watching probably feel the same way as you guys. But yeah, it kind of seems similar with what you do, Travis.
Yeah, for me, it's a lot like a treasure hunt. And so, the work is many times fun for me, or at least like the hunt part of it is exciting, gets my pulse up. And so, yeah, I'll find myself like last night, the wife and I are watching some show on television.
The Office.
Yeah, something. Yeah, probably that. But on the side, I'm working on my laptop and I'm reading footnotes of financial filings, trying to find out if there's something that the market missed, or something that I might be able to unearth that gives me a little bit of an edge. And so, yeah, that hunt is what keeps me after it. And it's like, I often say investing is like the greatest game because it's so difficult. It's so competitive, but it's also so rewarding. And so the spoils, so to speak, of getting good at it or finding something that you have an edge in is just incredibly rewarding. Yeah.
I completely agree with that, man. It's the hunt, right? I think you said it perfectly. It's like just knowing that there's always another massive winner somewhere in the market coming soon. And if you can find it and you can capture it, I don't think anything else in business is equal with that feeling.
Right. And it's gonna be, you could do this for the rest of your life. I think that's the other thing that I really like about it is the financial markets are going nowhere. They'll be around for our entire lives. And it's just a skill that compounds on itself. And you just get better and better at it. And, your research gets better and your skills get better. So that feeling of getting really good at something, I think is wildly underrated, especially as you get older. Like being able to have confidence in your skills if something is very competitive is an awesome feeling to have.
And the markets are becoming so much more accessible, right? I mean, just look at what crypto's done, and maybe we're about to start sliding backwards in the US with regulations, but at least globally, like more people than ever have access to exchange type markets, right? If it's crypto or stocks or whatever, especially crypto. And, some of this stuff is the Wild West and unregulated and a lot of scams, but at least more and more people have the opportunity to do it if they choose that. That's where their brain is best served.
Totally.
So we've got a bunch of questions that came in from Twitter and also the community, but I just wanted to hammer a couple that I thought were kind of good segues. Max Power from Twitter was asking, if you were 20 today, where would you focus your time? I think this is a good question because there's a lot of young guys out there that look at us that have been in the markets for a decade or two or more. And they're like, okay, well, do I do that? Do I build a business? Where's the opportunity? And a lot of people that are young, they have not so much capital, but they have a lot of time, right? The older you get, you have less time and maybe more capital. But if you were in your early 20s today, where would you focus your time, money, and efforts?
It's a good question. So let's assume that, all right. Yeah. Funny story. Actually, I was hanging out with some guys who were in their early 20s a couple months ago. And one of them, he just turned 23 and he was kind of bummed out. And I asked him what was going on. And he's like, I don't know, man. I feel like I'm just getting too old. Like, I don't feel like I'm ever going to make it. And I was like,
oh,
wait, what? And what I realized is that I don't know what it's like to grow up with technology and access to this much information and like YouTube and Instagram and TikTok. Like, I don't know what it would be like to be that young and to know what everybody else is doing and have everybody know what I'm doing, which I think is probably the first thing I would say to people is do everything you can to remove this comparison world, because it's just going to drive you nuts. And it's going, when you're that age, when you're 20 years old, you're going to follow what people tell you, what people respond to. So if you like start doing stuff that people really like, if you get really flashy and you're really extroverted and everybody loves it and everyone's like, this is amazing, you're so cool, and you're getting all these likes on whatever social media platform, you're going to keep doing that, because when you're 20 years old, you're like, why would I ever stop this? This is amazing. It's very hard to be like, no, like this is the right path to be on when everybody else is telling you, no, that's not cool. Nobody likes that. So I think if I was starting over when I was 20, I would definitely want to be in the crypto world. I think crypto is probably the best place to start when you're that age, because you get access to the smartest people in the world very easily. There's so many people that are willing to talk to anybody online, and they don't care if you're 15 or 45. Like, you're just an avatar in Discord. It doesn't matter. So you get access to the most amazing people. And I would do everything I could to find somebody in real life who could be a mentor or a guide, and who I could either work with or I can meet once a week. And if I can't find them, that's okay. Like, maybe you start on YouTube, maybe you start on a podcast, whatever it may be. But having somebody that's in person, I think is going to make such a huge difference when you're that age, because they'll be able to give you the reinforcement and the validation and the approvals that you need. Like you have to get when you're that age. and they're going to say, this is the path you should stay on, of being a good person, of having integrity, doing the right thing, being smart, getting good. And they'll help you course correct along the way. And obviously you want to have fun. Like, you're like 20 years old. You need to go do everything you're going to do for a couple of years. Like, if you're boring, you're just going to regret it. And that's not fun.
Enjoy life. But
Yeah,
I like what you said about like not comparing, because you're right. Like when we were in our late teens, early 20s, like there wasn't as much of that, right? I mean, nowhere even close to what it's like today. So if you're, a guy hopping on Instagram and you're looking at these gurus or influencers or whatever that are just a few years older than you, and they seemingly are wealthy beyond imagination, and they're showing these lifestyles, right? I can see how comparison could be a real big thorn in your side. So I like that idea of just trying to eliminate as much of that bullshit as possible.
I think the other thing I would tell somebody who's in their 20s is that, especially with finance, like the tried and true principles are tried and true principles for a reason. And every year that you think that you're smarter than these principles of finance is another year you're going to regret not doing it. And that includes mostly around investing, having retirement accounts, compounding your interest, like all of these things. I can guarantee every single person, when they're in their 30s, will look back at their 20-year-old self and be like, why didn't you just take $20,000 and just put it, or $10,000, whatever extra money they have around, and just put it away into the SP 500 and forget about it the way that they told you to. Like, it's so easy to want to make these like huge wins early and get ahead of the curve and to beat everybody else. It's so, I totally understand that feeling, especially with the world we live in now. But man, if you're 20 years old, just do not think you're smarter than the markets. Like,
at
you're
least
not.
get that buffer, right? Like you said, take that 20K and just get it invested. It's like what you said, I was like raising my hands, because I was like, yes, like that is exactly like from my financial planning brain. I wish more young people would focus on that and focus on getting that foundation going with their investing, and then play with the other stuff once the foundation is there and built. I think that's a really important thing for peace of mind. But a lot of young people, especially on TikTok and all this social media, it's easy to, like you said, look at what everyone else is doing, compare yourself, and want to chase bad strategies, or not quote unquote tried and true strategies first. But other way around, I think, is the way to go.
Yeah. And Trev, you mentor a lot of people, I think still today at UT, right? Like what kind of things do you tell them?
Yeah, it's funny you mentioned that. I was actually there just about a week and a half ago. And so got to meet some really bright students that are headed to Wall Street this summer, and then for full-time careers. But yeah, I mean, I think, advice-wise, Carter, you actually wrote something interesting a couple of years ago on your Medium. I think it was called like Grand Plans. And it was basically about, seizing the like periods of momentum in your life. And so I think, that's a big one, is like your 20s and early 30s, you have so much more energy, and you have so much more ability to kind of take risks and branch off into various paths and see where they go. As you get older, you get locked in with like golden handcuffs from your, better paying jobs, or maybe you're chasing a title, or maybe, you've got kids and a family you've got to support, and you can't take as many risks, right? For a lot of people, that's how life trends. And so I always tell the people that I mentor that are 20 years old, you can make some mistakes over the next decade. The mistake you don't want to make is just getting too comfortable and getting too soft and not having any ambition. And that's basically exactly what you said in your post called Grand Plans. And I thought that was just really, really powerful, because, you want to seize like that momentum of your 20s when you're young, and you have that not only energy, but the ability to make mistakes, and people are going to forgive you for it. And so that's I think a really important time in your life to be able to have that springboard for the rest of your life. So that's I think one area. There's a lot of other things we could probably talk about specifically to finance, but I think that just as a general overarching principle is a good one to think about.
Well said, Carter. What's the Banana Town strategy? I don't know. I've heard you say this. I don't know what it is.
Oh my God.
I don't either.
Nate was asking, ask him about when it's time to execute the Banana Town strategy.
Dude, there was a video. I did at some point during the bull market, and I was like not a Freudian slip, but like I said something and I meant to say something else, and I said, "Oh, we're going to Banana Town. Like it's going to be insane. Like
Is it like
as
the
like
beach of the moon?
yeah, like it's going to be crazy. Like everything, like we're going to be millionaires or something. Like it's all Banana
Okay.
Town."
Nice.
And I caught myself on camera, and I was like, "Did I just say banana? Like what?" And like in the comments that day were just like, it was all Banana Town. It's just been this meme for anybody who used to watch the videos. So I guess the Banana Town strategy is just like, how do you pick the winners and go big? I guess I don't know.
Okay. So basically, if Bitcoin hits 100K, you're going to get a banana suit. And dance on the live
Yeah,
stream.
I will definitely get a banana
Fair.
suit. Well,
All right, you heard it here, folks.
Banana Town party for sure.
Yeah, Carter, where is the next Banana Town gonna happen? Like, where is the what asset class? What area?
Oh man, dude, I don't know, man. Like I have a hard time thinking about, like I've historically done pretty bad trying to predict long-term investments. I've been much better at like identifying emerging things and just piling in and just figuring out which ones are going to work, not picking the exact winner. But one thing that I'm extremely interested in is, well, one, crypto. I think crypto is like super interesting in itself. But I think this idea of genetic engineering, I think, is so incredible. I do think AI is probably going to have the most like 10x trade, like meme trades, but it's too hard for me to keep up with that. Genetic engineering, so I think you have like this very interesting demographic shift where you have a huge amount of people that are getting older that are looking for solutions. I think you also have this huge generation of people that is social media just like ruined them in many ways, made them unhappy, burned out their brains, everything. And they're looking for something better. And if you could go to someone and say, listen, for $500, we can turn off this part of your genome and we can turn on this part of your genome. And for the rest of your life, with no side effects, you will feel completely different. Like all of these things that you don't like about how you feel and what's wrong with your body or whatever are gone. One-time thing, no side effects. I mean, I'm simplifying it obviously, but like what CRISPR is able to do, and like this genetic world, I think is going to become really interesting because it's something people will pay a lot of money for. Like if it becomes really a viable thing, I mean, who wouldn't be like, oh, you have this gene for this particular thing, this ailment that you have for arthritis or whatever. We can just turn it off for $1,000. You could stop taking medication and it'll be gone in 2 weeks forever. Like who would ever say no to that? Right.
Yeah. I did work on some of the CRISPR companies. There's several of them that are publicly traded now. Back a couple of years ago, got really excited about them, and I continue to kind of keep an eye on them. It's been a little bit disappointing to see how slow. It's not even their fault. It's just it takes that time to get through the clinic and get through phase trials, even on genetic therapies. And so it feels like one of those things where the hype cycle, you had that like initial peak, then you come down as people realize, okay, it takes 5 or 10 years for these therapies to get, from the lab to the end user. And then I think like in the next probably 10, 15 years, like you said, like we're going to see the effects of that start to really hit, and it's going to be wild. It's going to be, it's going to be really, really something to see in terms of like the types of diseases that we can treat. And also just the types of conditions that we might be able to alter, like you said, maybe even at some point altering physical conditions or mental conditions in ways that are going to be very surprising to people on like a longer term time frame.
Totally. I think also one of the fleeting indicators of emerging markets is often what you see on dark markets, like black market, dark web, whatever you want to call it, of like, how are people, like, what are people creating markets around? That's how like crypto became really interesting, is because like people were building up these markets around it. And one of the things I saw in 2015, 2016 is that people were creating these like custom CRISPR marketplaces, and they still exist, right? Like it's already out there, like beneath the surface. And anytime you see that, you know that there's a lot of money and a lot of incentives to be built. And I think that also dovetails into what I would consider like my bull market thesis of all crypto markets, is that you need to see people making money doing things other than trading before people are going to pile their cash into crypto. And so what I would tell anybody is, when you start to see people on Twitter, in Discord, and Slack, anywhere, telling you they're making money in the crypto markets or doing anything else, and it isn't hard to do. Anybody could do it. That is the thing you should like. You should buy as much of that thing as you possibly can. And the scammier it is, the better. Like, because like that means it's easier for people to make money doing it. And like I've seen this happen over and over and over and over again. And I don't know what the next thing is going to be. I would encourage people to go read books like Liar's Poker or Flash Boys, where Michael Lewis, he's very good at showing you the history of the evolution of finance, where it shows people in the financial industry who woke up and just said, listen, I came up with a new way to make money. I learned how you can securitize mortgages back in the 80s at Salomon Brothers. Like he shows you how people did this, and you could start to see all these parallels to crypto. And I would imagine that somebody's going to figure out like the next way to make like money-making schemes in crypto. One idea I had the other day was like similar to mortgage-backed securities, where you have thousands of coins. With FTX, for example, on their balance sheet, they're like, oh, we're worth $5 billion. There's no liquidity for any of these coins. The floats are huge. There's like $400,000 in liquidity for Oxy or whatever, and they have $1 billion worth of it. I wouldn't be surprised if someone figures out, hey, why don't we take all this Oxy, we'll take a little Bitcoin, we'll take some Ethereum, we'll take all this Ripple, and we're going to package this up into a crypto-backed security. We're going to wrap this up into a wrapper, and we're going to add a value to it, and we're going to tranche it, and it's going to be like a AA rated or B rated, whatever, because it's got this many shit coins, this much Bitcoin in it. And we're going to sell that to our clients because, like, you know, there's eventually this value will be worth it. Like they'll make up some story exactly the way they did it with mortgages and like
Carter,
with everything.
Carter,
I think
listen.
the SEC would be fully into that, right?
I don't. Yeah, Gensler can do whatever he wants, but Carter, if you're going to be the next Michael Milken of crypto junk bonds, I want in on the ground floor.
Yes.
Yeah, let's do it. You heard it here first, guys.
I think STOs. We've talked about how STOs might also be an area where that something like that could also happen, or like ETFs of crypto. Even like we haven't really seen a lot of that innovation fully utilized yet.
I kind of put STO security tokens in the same, I guess, idea as CRISPR, as far as like the lack of follow through or just like the slow burn. Like I thought by now we'd have all kind of assets securitized on the blockchain, but I don't know. It's moving slow.
Yeah, I do think the most immediate things that we're seeing with these money make is like the casino stuff. So there's some casinos now, like on Arbitrum and elsewhere, Solana, where they're trying to figure out how to create higher incentives. So it's like you make a sports bet, and no matter what the odds are, you get 10% back as a rebate on any losing bet. So like they're trying to figure out these like ways to get people to continue to pile money into these things. That obviously is not a very long-term good tokenomics, so you're still losing. But like you could tell that people are trying to figure this out again, the way that they were trying to do it with yield. So somebody's going to figure it out in the crypto markets in the next 6 to 12 months. It's going to look exactly the way that DeFi did back in 2020, when you're just like, you're getting 9,000 APY. Like you got to be shitting me, because you're going to compare it to the financial markets. Someone's going to do the same thing, and you're going to compare it to what the legalized regulated markets are for that particular thing. You'd be like, this is insane. Like, what are you talking about? This doesn't work. And it's just going to keep working, and it's just going to continue it's going to attract more and more capital. And then people are going to keep piling in, and all of a sudden you're going to have this light bulb moment, be like, holy shit, this actually might work. And that's when it really starts to take off. And as soon as I tell everybody, as soon as you see stuff like that, that's the sign. Like that's the thing to go all in on. Yeah. Because the money's just going to come flying in.
We saw something similar to that, I guess, in stocks with SPACs in 2020 and early 2021. And then I guess meme stocks to some extent as well, but certainly SPACs were kind of like an innovative thing, you could say. But so Carter, you're really good at catching some of these early trends. How do you know when the train is about to crash, and how do you know when to get out or get off?
I think a lot of it. So typically the best schemes, the best scams, the best whatever you want to call it, they have a very strong leader. Like they have somebody who's kind of leading the charge, who's evangelizing it all. And I find that watching how that person evolves is a very good indicator. Where as soon as they start to be like, oh, I have so much gratitude for what we're doing, and like it's all about you guys, and this is so incredible. But on the side, they're not like that. They're like very much just all about the money, and they're like, you can see this when you like look through the Twitter replies and what they like, and you see all these like different things that are kind of inconsistent. And as soon as you see that, you start to see that, like, you're in the froth zone. Like it could still double or triple or quadruple or whatever from there, but you're at a point where this guy is dumping on you. Like he is selling all of his stuff to you, like it or her, or whoever it may be, because he's feeling that, or he or she are feeling that gratitude because they know how much they've already won. Like they beat you. And you don't feel that gratitude when you're still trying to make it huge. Like you only feel that way once you've already won. So I think that's actually that's something I saw in 2021 in particular. Like Terra is a prime example of that with Do Kwon. I know
Chris uses the celebrity indicator. Do you notice? I guess it's similar to kind of what you were just saying, where like once you start seeing like celebrity advertisements for the asset, it's like it's close to game over.
Yeah, I think it's hard. Like I think you guys probably get it. Like there is a very specific feeling at the top of markets where it's you cannot, like you mentally cannot believe that there's any way this could be the top. Like that this is not the top. You feel it, and you also look around and you're like, this is so unbelievably ridiculous. And when you've gone through a few of these, like you learn that discomfort is what it's supposed to feel like. You're supposed to be like, I cannot believe I'm doing, like it's painful to sell this right now.
Yeah.
You almost want to throw up because you're like, oh God, I can't believe this. Because I might miss out on the next, like I might quadruple my net worth if I hold on to this for another 2 weeks. And I think that combined with some just basic charting on some of the bigger assets is enough to catch 80% of the move.
Mm-hmm.
Nailed it.
I want to show you this. So
Nailed it.
this was a tweet. This was, let me go to a daily chart. So for anybody listening to the podcast, this was Ethereum back here in the spring of 2021. And I tweeted on the kind of the pivot reversal where ETH got rejected off of 4,400. I did a Twitter thread just saying like, I took a lot of profit on my largest positions today. And I was just talking about position sizing and all that stuff. But something that happened around here was I got in an elevator, forget where this was, but there's these like 2 12-year-old girls bragging about their NFT gains and like talking crypto. And I was like, oh, I felt that my stomach. I was like, oh, ow, that hurt. What was that? Sometimes the market just blesses you with these stomach pains.
Oh, what is this? Oh, I need some Tums for this max inflation going on.
Man. I mean, we had like Elon on SNL, Mark Cuban pumping Doge. Like there's all these stories that happen at the highs, right? But I like your idea of like looking at the cult leader, right? And there's several of them that are still prominent in the crypto space that haven't been flushed out yet. But it's oftentimes the biggest egos and the guys that are doing that, right? Like, oh, I'm so thankful for you guys, as they're like just collecting their money, getting ready to get the fuck out, right?
Yeah, like you don't know the full story. And even down here, like there's some people who have made just enormous sums of money in crypto, and the person that they are publicly is very different than the person you get to know after a few beers. And that's definitely opened my eyes to like what the game that people are playing in crypto. And it's not like, hey, let's change the world. It's a lot of money being moved around. Chris, I remember one time I was in Austin. I just moved there, and we were at a bar, and you pulled out your phone, and we were looking at the NASDAQ. This was in February 2020, maybe.
Okay.
And we were looking at it, and you were just like, man, this thing is just like, it can't just keep going up like this, right? And like, because it was basically vertical at that point. I mean, and everybody's saying, oh, the best economy of all time, everything's great, blah, blah, blah. And like the COVID thing hadn't really, it was still kind of in the background. Maybe it was January, February, somewhere around there.
Mm.
And sometimes it's also like that too, where you can just look at a chart and say, like, there's no way this can just keep going. Like like something is off here. And that usually turns out to be true. Like the timing might not be easy, like when it's going to peak or whatever. But I mean, I remember that exact, like that was probably 2 weeks before, it started to kind of putter out, and then February 20th hit, and that's when it just like nuked.
Yeah, probably somewhere through here. And it's just, at some point, things are just overbought. And then at some point, things are oversold, right? And timing's not going to be perfect, but at least that's a starting point for getting on the right side of the market, right? Or preparing to get on the right side of the market. Mm-hmm. And then everything else, that's like the 30,000 foot overview of it. I either feel really nauseous about how euphoric things are, or I feel really, to me, I'm more comfortable in bear markets. Like I feel that greedy sense, right? Where I'm like, everybody's really freaking out, or things are so depressed. Like now's the time to go. And when you have those intuitions, or you see that, and all this information kind of in the real world confirms those feelings, then you can dial in on the technicals or run the data, and you're close to the right side of the market. And if you just start there, I think that's going to save people losing a lot of money, at least.
But isn't it a little bit odd that during the bull market and the price action you guys are talking about, where people are piling in at the top, and you're over here saying, oh man, I don't know if this is going to keep going. It's overbought, right? And people are just piling in thinking it's going to keep going. And then on the flip side, when things are super down and out and bearish and ugly, people don't, like, you would think people would react. It would be like an opposite reaction. But people, when it's ugly and bearish, people get scared and run away. But when it's very optimistic, price actions at the top, valuations are through the roof, they're running into it. And it's like people almost need to learn how to get comfortable doing the opposite. But for some reason, they're really excited at the top, absolutely petrified, running away at the bottom. It's just interesting how the psychology around that for most people works.
I think it's right on. I think one thing that has helped me as a trader, especially in futures, is exactly that point, Nikki. Like, trading anything in markets is essentially you're competing against other people. And I think it's really easy to, like, you go into any Discord or any Slack group, anywhere, Telegram, everyone's always talking about everybody, all the other normies out there. They're talking about all the other retail traders out there. Like, nobody in here is like that. We're all smart, but everybody else is like this dumb money or something. And I think I've learned, like, I am just like everybody else. And guess what? 99% of people watching this are just like everybody else too. We all feel the same stuff. We all feel the greed. We all feel the panic. And I think what makes you a professional, or what makes you start to make and compound your money, is when you can realize, like, this is what I'm experiencing. This is the emotion I'm having. This is what everybody else is feeling too. How do I use this to my advantage? And in markets, the answer is you act in a different way, usually with like some sort of system that says sell or buy or whatever it may be.
Contrarian way.
So right.
Almost. Yeah.
Yeah. I think that's like when you start to realize you like, you can be your own best indicator, then that can be a very powerful tool.
Yep. I remember during the March 2020 panic, when Bitcoin dropped from like, it was around 8K and then dropped into the 4K range. I remember I woke up that day and I checked my phone, and the first thing I said was, fuck. And I was like, I had that emotional, oh no. And I ran and I got my computer. I'm like, wait a minute, you idiot, get coffee. This is a good thing. Yeah. You have to realize you're human and experience those emotions just like everybody else. But it's what you do after that makes the difference. If you're a sheep, or, someone who can capitalize on it.
Be uncomfortable at the top and comfortable at the bottom.
Right. Exactly.
Man, so much good stuff. Carter, I saw you were tweeting about this, I think within the last month or two. And we've been talking about it amongst ourselves, just the idea of Coinbase, right, as a stock. And somebody was asking, see if I can find the question. Basically, what do you think about just buying Coinbase as a proxy for altcoins? And are you bullish? Are you bearish? I've got some opinions on it. I don't know what your current opinions are on it, or if you have any.
I think broadly speaking, Coinbase will outperform crypto as a beta like index. So from bottom to top, I think most people will be better off trying. If you want access to the crypto markets, you should just buy the Coinbase stock. The reason I say that is because when you look at the crypto markets, the capital can go everywhere. Like there's 1,000 places to put your money into, and that gets diluted. That's why like 2017 bubble will never be repeated, because there was only 50 things you could buy. There on like 2 exchanges. So like the reflexivity was just insane. Now there's a million things you can buy. So it's harder to get these concentrated pumps. In the equity world, there's like 2 things you can buy to get crypto exposure, like real crypto exposure. And Coinbase is really the only one that people take seriously. Like obviously there's regulatory risk. There's the company's like not of great, like I'm not bullish on the company of Coinbase, but I'm bullish on the idea that it will get you like much better access, because it's the only thing you can buy in the equity markets. It's also becoming a meme stock. Like if you look at the options activity on Coinbase, I mean, they just move this thing around like a ping pong game, which is often a very fun thing to be bullish on when it's going up. So
GME 2.0.
Yeah, I think it's. I mean, look at the chart; it's just got huge room to the upside.
Mm-hmm.
But
definitely like, a busted IPO. So Travis and I have been talking about this, and Nikki too, just about the competitive landscape and like things like fee compression, right? And like all these things that make sense fundamentally. But what you're saying is like it could be even if it doesn't make sense, even if the company isn't the best fundamentally, it can still rip during an altcoin season.
That's exactly right. Yeah. Like, and that's a good point. Like, I don't really pay attention to a whole lot of fundamentals in my research. I'm more of a liquidity type of person. I think both of those are very important for like, and fundamentally are probably much better for long-term investing. Mm-hmm. I think Coinbase is just a liquidity play. Is it going to attract capital flows better than, let's say, Ethereum or Bitcoin will from a price action standpoint? And I would say in many ways, yes. Like there are certain altcoins that are going to have 400% moves. No stock is going to be able to consistently beat that. But when you get up to the big coins, I think it can definitely compare to that.
Yeah, it's interesting. I think I said last week's We Talk Money that, from a fundamental perspective, especially if crypto markets remain in a bear market, Coinbase might have 50% downside from here. But and it's going to sound weird, but I also agree with you to the point that when you do get a sustained up cycle in crypto again, Coinbase is probably as good of a play as any in the stock market to sort of ride that beta. And so I also agree with you. I think it's a big part of it is figuring out where you are in the cycle. And if you trade that at the right time, especially as a crypto cycle turns back up, I don't know if that's this month or 18 months from now, but I think, like you said, Coinbase can be probably even as good or better than BTC at a certain point, particularly if it does go down 50%, let's say in the next 6 or 8 months, and we continue to be in a bear market, and then, they cut costs enough, it becomes super operationally levered to crypto prices and volumes. And on top of that, you're going to get flows from stock investors and ETFs when things start to work again. And so it's similar to kind of like how, ARK, it's a terrible fund, but it will get flows when high growth and tech stocks become in favor. And so it can move as much or more as a lot of the underlying assets. And so it's not something like necessarily I think is fundamentally great, but trading it at the right part of the cycle, definitely, I agree. Like you've got juice in that trade for sure.
Yeah, Totally.
Interesting.
MicroStrategy could probably be a similar idea too at some point. To your thoughts on Coinbase, just another stock to kind of put on that list.
Yeah, that's the other big one,
trade.
but it is very levered from a balance sheet perspective. And so I think 0 is a lot even higher of a probability or possibility for MicroStrategy if you stay in a prolonged bear market. That's the only caveat there.
Yeah, I was thinking more from a trading perspective. If we happen to get like breakout in Bitcoin or something, then
Absolutely.
yeah, that's just another one to add to the list. But I think Coinbase is in a much better scenario fundamentally and technically on the chart to be able to play that.
One thing I learned when I was in Austin, actually, talking to a lot of institutional guys, like custody is just the only thing that matters to these guys. Like that is the only thing they care about. And if you told them, hey, look, here's our analysis on this 2023, 2022 echo bubble. Here's what Bitcoin did. Here's what Ethereum did. And Coinbase actually beat all them. If you told them that and said, oh, we can buy a publicly traded regulated stock that gets the same exposure to crypto as all of these cryptos, almost all of them would want that, as opposed to having to custody a decentralized coin or whatever it may be. And that is very powerful. Or I should say, it's powerful enough to give it the juice it needs. Like Travis said, when things turn back up, when the market gets going again, I think that's going to be where a lot of that money goes to, because it's just easier. It's easier for them to do it. Like they don't have to file all these other forms and do all this other stuff. They could just buy that stock.
Mm-hmm.
They also have the brand name now. Like Coinbase has become the quote unquote trusted, custodian for the mass majority of people. Maybe not like the super crypto, in the weeds people. They don't trust that, but every day, mom and pop investors, they do trust Coinbase. It's got the brand name now that, could give it some help there.
There's another good question that just came in. I think this is one that maybe we could all answer. What do you feel most people misunderstand about the markets or in the markets? This is good, right? Because this is how people start. They have beliefs about what the markets are and how they work. And then based on those beliefs, they employ whatever their strategy is going to be. So what is something that maybe people misunderstand about a specific market? Maybe like how something works in a specific market, or just in general, how markets work? Whoever has an answer for that, feel free to start.
I mean, on the stock side, I think one of the biggest ones is that business performance doesn't equal stock performance and vice versa. So you can have a good business be a terrible stock investment, and you can have a business that's not so great, at least for some period of time, be a really good investment on the stock side. So it's really counterintuitive at first, I think, for newbies to kind of understand that there's not only a business quality component, but a price component. Like, what is the price implying about how the market is valuing something? So like if you get a business that's just a mediocre business, but it's priced, below the cash on its balance sheet, for instance, then you've got a pretty interesting trade there potentially. And as we saw in 2021, you can have great businesses growing 30, 40, 50, 60% a year. But if they get bid up to 30, 40 times sales, valuations that most stocks can never survive long-term, then, it becomes a bad investment, even though the underlying company is good. So that's, I think, a big one is for people to differentiate business versus stock. Certainly that would be on the top of the list for me.
Love it.
I think this is more about like the relationship people can have with markets, or like the mindset of markets. So when I first started trading the futures markets, and even with crypto, but definitely with the futures markets, I arbitrarily decided that each trade I was going to try to make $500. That was just that was what I decided was the amount. And I spent the first 6 months focused on making $500 per trade. Everything was around this amount of money, like this size trade. And then I remember I watched an episode of Billions, and he got some information about the natural gas market. And he's like, oh, the natty gas market is going to go up. Great. He goes back to the office and puts on like $2 billion. And I'm like, dude, I have the same idea about natural gas, for example. I'm trying to make 500 and he's making 2 billion on the same information. I'm like, what am I doing? Like, why am I thinking about $500 trades in a liquid market? Like, I'm not talking about risk management. Like, obviously that's a whole different discussion, but I'm just like, it kind of opened me up. And this guy I was learning from, a good friend of mine who's teaching me a lot about futures, he was walking me through some futures trades and he was looking at the same charts I was. He did a trade and he's like, good. Oh, good. I just made like $35,000 this morning. And I was like, what? Like, what are you talking about? And it was just because that was the size of trade that he was used to making. It wasn't that he had exponentially more money than me or anything else. It was just, that was his baseline. And the same thing happens in crypto sometimes. Happens with people's risk tolerance. It happens with what you expect these cycles to do, how far you think the trends are going to go. It's like all based on this frame of pain and your reference rate and like what you believe you should be happening to you in some capacity. And what I would tell anybody who's a trader, an investor, whatever it may be, is to really make sure that you are giving yourself a shot to make a lot of money. Because often we dip our toe into incredible opportunities and we're going for $500 trades when we could be making $3 million on the exact same information.
Mm-hmm.
And that the markets, like assuming the liquidity is there, which it does in most markets, like that is such an important skill. Like it is the reason why so many people just don't make a lot of money, is because they have these limiting beliefs around how much money they should be thinking about. And that's a process. It takes years to work this out. But I mean, I would just tell anybody that like really think about what size trades you should be making within reason. Like obviously not dreaming about Moon Boys and Banana Town, but stuff like that.
Here, man. I love that. I remember back in the early days of like trading futures in high school, a $50 win or loss was a big deal to me, right? Like 1 point on the ES, and that the amount of stress that came with that. And then now, having a 7-figure swing in a crypto trade, I'm more comfortable with that than I was those little $50 trades, right?
Yeah.
It's all anchoring. It's all mental anchoring. And like, also I think the danger in setting a $500 a trade goal or a day goal is like you're placing some arbitrary amount on the market that the market doesn't know about or give a shit about. Right. Like maybe $500 is the max that you could pull out of that market at that time, or maybe it's 500 million. And like you said, in a lot of cases, it's you that's placing those limits either too high or too low. And I always tell people, like, assume no matter what your bankroll is today, assume you're trading with whatever your goal position size is. So if you have $5,000 to your name, but your goal is to have $1 million trading portfolio, act as if that position size is $1 million. That way, when you build up to that, if you build up to that, you're not going to behave differently and trade differently and be intimidated by that size when you get it.
Right. Totally.
Nikki, I know you're the mental game expert in the community. What thoughts do you want to add to that?
How did you know that I was going to go to the mental side? I was going to say one of the biggest misconceptions in the market, in my opinion, is people don't realize how much mental anguish it can cause being in the markets, and how you have to master the skill set of controlling those emotions. Because I always say, and trading and investing is 80% mental and 20% actually pressing buy and sell buttons. Because if your mental is messed up, everything else gets ruined. So I think that a lot of people don't think about that because they have their mindset on, like you talked about, Carter, the $500, the whatever the dollar amount is that they're wanting to make on these trades. They're so focused on the money that's all they think about. And then they get upset and distraught when they lose and they can't figure out what they're doing wrong. And 9 times out of 10, what they're doing wrong has to do with the mental side and trade management and risk management. So, that's what I think people just don't really understand about the market. And some people quit before they learn how to master that. And my message is, don't quit, just, work on that skill set and you'll get there. It takes time. Like, all of us did not become where we are in the markets overnight. It took years of honing in on this skill. And I just think people need to look at it as such, a skill set, a skill stack.
Mm-hmm.
Yeah.
Well said.
So, Carter, you've been, after you left the app space and you came into trading and crypto and then the futures markets, like, you've been doing this for quite a while now. What, if anything, would you look back at and say that was a massive mistake? Or not that you would change anything, but anything that you look back on and maybe you could impart wisdom on people that are newer to the markets and say, oh yeah, I would not repeat that, or I wouldn't do that again? I'm kind of putting you on the spot there.
No. It's a good question. I think the biggest thing is that, especially in crypto, paid groups get this horrible reputation. It's just like, oh, you're a paid group leader, you must be a scammer, blah, blah. I think that's complete bullshit. I think that you're insane to try to learn how to do things on your own. Like, I think it's irresponsible. I think it's why most people fail, because they try to figure it out themselves. They think they go watch YouTube videos and learn how to trade crypto or futures markets. Like, that's what I did. And I wasted a year of my life and I lost a lot of money trying to figure this stuff out. And I was like, I didn't know, I was just rudderless. I didn't know what I was doing. So I would tell anybody, if you are interested in markets, trading, stocks, making money with markets, go find somebody who knows what they're doing, has proven success, has a system that you can follow, and has a teachable process that they can you can take with them. They will guide you through it. You can follow it. You can learn about it. And then they will hold you accountable to continue to follow that process and build that discipline and build that skill set. It's just like going to school or whatever you want, like, that sort of mentality. Trying to do it on your own it's just such a bad idea. Like, I can't stress that enough. There's no room for creativity in trading. It's like, just execute the system. That's it. This is not entrepreneurship. There's no ego involved. It is purely, can you do what the thing tells you to do? That's it. And it's harder than it sounds. And when you're just starting out, you're like, oh, I'll just figure it out myself. And then maybe after you've lost a lot of money, you're like, maybe I should go learn something. And then you don't like to do it. It's a pain in the ass because you got to relearn all this stuff. It's just like, just from the beginning, go do it the right way.
That's the allure of financial markets, right? There is no barrier to entry anymore. It's like, you got an internet connection, you got a phone or a laptop, like, you can trade with the best of the best. But if you don't know what you're doing, the best of the best are going to eat your lunch.
They're going to trade you.
Yeah, exactly. Yeah. And it's just like, you're going to waste so much time. Like, you don't have to go through the school of hard knocks. Like, maybe if you're a startup founder, yes, you have to learn how to pitch and get rejected. Like, it's like dating. You got to go through some sort of rigmarole to get to the process. You don't need to experience the pain of losing half your trading capital to, like, learn how to trade. You don't need to do that. The same way you don't need to learn how to fail before you take the SATs. Like, you can go to school first or whatever it is. And you probably should. It's like a smart way to do it. And then after that, you can, like, all these top traders, if you read Market Wizards, all these guys, they didn't just wake up and decide to become a trader. They went and worked at banks for 5 or 10 years. And then they started a fund. And then they became great on their own. But they learned it all somewhere first. And then they went and did their own thing. Yeah. I think that's a really good way to do it.
When it comes to the education side, obviously you need to have the ability to tell who's full of shit and who actually knows what they're doing, who's pump and dumping on you, or who's a complete fraud versus people that actually have a proven track record. Right. I think that's why we do what we do, man. I mean, we love teaching and it helps us get better as well.
Totally.
One more question, then we'll start to wrap it up here. I know we've been going for over an hour. What do you guys have any opinion on, say, like the barbell strategy? Do you have any thoughts on how to apply it? Is it even necessary? Anybody want to chime in on that?
that could mean a few different things. Like barbell strategy and bonds, for example, is like different. I don't really know what the context is.
There was none. I left it broad for that
Okay,
reason.
Okay.
As I've often heard the barbell strategy utilized, and as I've utilized it myself, is it tends to be a setup where you've got a lower risk or more stable asset on one side of the portfolio, and then maybe a higher risk asset on the other side of the portfolio. And we do that oftentimes by, for instance, you could mix passive and active investing like we've talked about, where you've got some passive index exposure to stocks, and then you do some active stock picking. It could be like right now, I've been talking about, hey, bonds, short-term bonds at 5% while you wait out some of the market volatility and choppy action. Maybe not a bad idea to have those bonds there. And then maybe some other longer-term positions on the other side as well. It could be like in the case of crypto, it might be, you've got your core BTC, Ethereum holdings, and then you've got maybe some riskier alts on the other side, something like that. I think there's a lot of merit to that approach where you do have your core, your base that's going to earn you that return that you expect will be positive over a long enough time frame. And then you can take some shots at some stuff where the risk reward, especially if you got a catalyst or you've done the work to figure out you've got some edge on the other side of the portfolio, can be really powerful. So I really like barbell strategies when they're utilized properly, but curious to hear what Carter and the rest of you think.
Well, I think the real barbell strategy is get in the gym and start doing deadlifts. So
Yeah, there you go.
Anyone out there not lifting it, like that's the first thing you got to go do.
That's the secret
Yes.
of life, right?
Move the body.
Exactly.
Yes, you guys are my inspiration. You thin, handsome devils, you. I've been in the gym for several months now, just lifting. I feel fucking fantastic, man.
Dude,
There we go.
I agree. I think it's the secret to life, man. Lift heavy weights.
Dude, testosterone is the new dopamine. It's the way to live. I think, Travis, I think you actually touched on something that's really important. It's all about edge on the actual, the 10% things that you're allocating to, because I think people confuse YOLO bets with like actual concentrated bets.
Mm-hmm.
Like making targeted VC or startup investments is very different than YOLOing on an altcoin that's number 900 in the market cap. Like those are two complete, like one has a lot of due diligence and work and a founder and all that. So I think that can be very helpful. The only time I've ever seen barbell strategies work is when those tails just have monumental upside. So, it could be like the Tim Ferriss did the barbell strategy back in 2013. His barbells ended up being Uber stock. Okay, like that's a pretty good thing to have on the tails. Or Nassim Taleb's hedge fund, which in March of 2020 did like 4,000%. Like there are these unique situations where that barbell strategy could work. But I don't know. I like the stock market is designed to go up. Like it's fundamentally built to go up and to the right, and it's going to get drawdowns and it's going to do all that. But it's also designed to be very hard to beat over the long term. And so I would tell somebody, if you have your own, like if you don't like risk, okay, that opens up a whole new conversation about maybe annuities or money markets or short-term bonds or whatever it may be. But if over the long term, like it's just going to be really hard to beat the market if you don't have a real edge on those barbells. So if you do, and you think we're going to be in a choppy bear market or whatever it may be for the next couple of years, that may be great. But if you don't have an edge on that stuff, like don't pretend like you know what you should be doing with your portfolio. Just put in index funds and go make more money. Like cut the shit. Just go do that.
Yeah, I think if I hear what you're saying, you're basically saying don't YOLO just for the sake of a YOLO. Like you don't have to have ultra high risk stuff on that other tail end of the barbell unless there's a real reason to have it.
Yeah, and I also think statistically, you're not actually going to beat the stock market or like a blended diversified portfolio over the long term unless you have incredible bets on those barbells. Eventually, you're going to lose.
Well said. So wrapping it up here, I want to hear I don't know. Should we do predictions? Do we even need to do that?
Why
How
not?
about this?
Why
If
not?
Sure. Yeah. fuck
if
it,
you
why
have
not?
any predictions for either markets or trends or ideas, doesn't even have to be price based. Feel free to throw those out there, and or just tell us what you're going to do for the rest of the year. What's life like for Carter Thomas?
So predictions, trends. I think we're going to retest the December lows. I think S&P is going to trade around 3,800 at some point. Or NASDAQ 11,000 or somewhere around there.
Mhm.
We might bounce first, but I do think we're going to go down there. I think that we are going to see, one thing that I think about a lot is the sheer size of the volume coming through these zero data expiration options. Like it's $1 trillion in notional value every day, like just being pumped through the system. And the way the implications that has on the dealers and how they have to buy stock to cover their selling calls, like these forces are insane, especially when you look at what the VIX is doing and all this sort of thing. It's hard for me to imagine that doesn't resolve itself in some way. I don't think like we're going to get a crash or end of the world or anything. But I do think it's going to be one of those things that people look back and be like, oh, we probably shouldn't have been doing that the same way we shouldn't have been doing the shorting the VIX in 2018. Like that sort of like, what were we thinking? So those two things may correlate, may coincide. I think after that, I could see the market going back up. Like I wouldn't be surprised if the market goes green this year, but I think real returns actually might get smoked. Like like inflation may just continue to creep up and creep up and creep up, and the market may keep creeping up, and people are like, oh, like I should just be long stocks. That's fine, but they're actually losing a ton of money on just the inflation of it all. Like they're just losing value, which would create this like very bizarre dynamic with companies having to do earnings with stock prices going, like all of these forces may start to get really, really weird. And then after that, I really don't know. I could see some sort of like crazy deflation in the next 2 or 3, like some sort of, we wake up and inflation's down to like 1% with AI and 3D. Like there's just so many deflationary forces that could happen. Like the war in Ukraine, like that just ends. All of a sudden the supply chains open up, AI comes out, layoffs just extend out of tech into other parts of the world, other parts of the economy. And we wake up and they're like, holy shit, like we got a deflation problem. Like what we just cut rates? Like what, like how do you go back from that? I don't know. So I'm open to anything. I don't really have any long-term bets. I do think that 2023 people will look back on the way they look back on 2008, 2009, and they're like, there were some just unbelievable deals in the startup world, like these new technologies that are coming out, AI, like, go look at the ARC categories, like anything in those categories, there are companies being built in those categories that will be the next Apples, the next Googles. Like, I don't know what categories they will be in, but in 20 years, this is the period when those companies were either founded, they were, seeded, they went public, maybe, I don't know. But this is like the beginning of some huge new secular trend.
Nice. Trav, you look like you wanted to chime in there.
No, I'm taking it in. I'm taking in the wisdom. I mean, I think overall, yeah, I think from a market perspective right now, we didn't talk too much about macro today, but the big story over the last week has been yields continuing to push up globally. Like Germany today got higher inflation data. The US economic data has been slowly trending up over the past month. And we've got that Fed meeting looming in later in March, a couple weeks from now. And the market's starting to worry. They're like looking at yields and going, all right, maybe we don't want to own stocks as much, especially ahead of this Fed meeting. We don't know how hard the Fed's going to really have to go now to try to snuff out this inflation problem. And so in the near term, it started to look a little bit more gloomy for stocks. And I definitely agree with that viewpoint that, it's going to be a rocky year for sure. Like we're not just like going to see what we saw in January. I don't think we're in a new bull market myself yet. I think we're still a ways off from that. But yeah, I mean, I think, like I do think AI is an area like Carter was talking about where there's probably some new companies slowly being built, quietly being built right now that are going to be game changers for the world in the next 5 to 10 years. So I'm excited to see what happens there. But yeah, I mean, I think the 0 days to expiration option stuff, like it made me think, oh, like, is there a 1987 event that we could see this year because of something like that, where, in 1987, one of the reasons why the market went down so fast was that there was all this portfolio hedging being done. So short sellers were shorting futures as the market kept going lower, which was just pushing the market lower and lower. And you can see a situation in the markets where if you get dealers too one-sided in terms of their options hedging exposure, they've got to actually sell more futures as the market goes lower. So it's kind of a similar dynamic. And so I don't know, I was thinking through the possibilities of what that might mean if we could get like a big, just nasty crash day this year at some point. We do have circuit breakers now, which helps, but that would certainly be potentially an interesting time to, load up on some stuff if it gets deeply, deeply oversold on one of those freak out days. So yeah, I don't know. I just had my wheels turning as Carter was talking, but I don't have any.
Well, some of those guys, like 2 different people, maybe the same person, who like bought a couple $1 million worth of like 100 VIX calls. I think they expire in May or something, but I mean, like that's basically like nukes going off. I mean, it's just like the end of the world type of VIX movement. I can't imagine we would, or maybe they're 150. I don't know, something crazy. But I think, to that point, a lot of people look back on March 2020 and they're like, oh man, it was all of a sudden COVID just like nuked the market. Well, actually it was a similar OPEX as what we're seeing now, where you started to get some selling, options expired, the dealers had to sell the futures, and it created an environment that created a panic onto itself while this news was unfolding. So it looked like COVID was causing this huge crash, but in reality, it was like the COVID stuff kind of like lit the box. The option stuff really set it off. We had that first big bounce because people were like, oh, well, this was just options activity. But then we were far enough into the pandemic that it was like, it actually did sell off. The fear was real. March is a lot of crazy stuff happens in March and October in markets. It's like 2 very bizarre months. So I don't know. I think it's a very good time to be tactical.
I agree with that.
Today is March 1st, so we're in for a fun, volatile month, it looks like.
And we're testing the trend line of doom.
Yes.
That's what I call it.
Oh yeah, tell us about the trend line of doom.
In the S&P 500, there's a trend line that's been of support that's been holding since the lows back in October, and you'd have to draw it up on the from the lows.
Oh, you're talking about the lows.
No. Recently, go back to October 22 and draw that trend line. You see that little wick?
The upside trend line. Yeah. This is definitely a big
trend line of doom.
It's a big moment right here.
It's not only a retest of the longer term previous resistance turn support, but it's also the one you're talking about, and it's the 100 and 200 period moving average. So yeah, right now here at 39.50 or whatever is a massive, massive area for equities. I think that, if it washes through this zone, I think we could be down, 5 or 10% just in a few trading days.
Oh yeah.
By the way, we get a triple witching day, I think in 10 days or 12 days in March.
Next week.
And you get a non-farm payrolls report, and you get a Fed meeting, you get an ECB meeting. March is going to be a fun month.
It's gonna be a wild month for sure.
Yeah, we've got a lot to look forward to. Maybe we should do some more live streams and stuff. Carter, we got to have you back, man. This has been fun hanging out with you.
Anytime, man. It'd be great.
Yeah, just come on here and do some live futures trading with us.
I would actually love to get back and see how that action looks in the futures markets.
I feel my blood pressure going up.
Put it right in the veins. Just got the IV hooked up. It's great.
Yeah, man.
You should just start putting out content of you just trading it just so we can watch you.
Yeah, not even the charts, just your face. That's all we need to see.
I'd like to see the charts. I mean, your face is great.
No, we're going to tell how he's doing just by the expression.
Just the freak outs that I'm having.
Man, well, Carter, thanks so much for coming on. I know we've been going for like an hour and a half, which is way longer than our typical show, but always a pleasure to have you. Thanks for dropping knowledge. Any final thoughts or anything, parting wisdoms?
No, I think make sure everyone's out there lifting weights. Eat a lot of protein. You'll feel a lot better.
That's right, man. I went carnivore for a week or two, like just straight carnivore, and like it was good, but I think I needed to add back in some fats and carbs a little bit.
Yeah, totally.
All right. Well, yeah, thanks again, guys. And yeah, where can people reach out to you? I guess Twitter, anything else you're up to?
No, Twitter's pretty much where I'm at. So yeah, hit me up on there. I usually check it once a day or something. So I'll be around.
Cool. Well, thank you so much, guys, for listening. Make sure to subscribe to the new YouTube channel, which you might be watching this on now. Also, you can subscribe to the audio podcast and go to wetalkmoney.com/community if you want to check out our wealth building community and see how we are investing and trading and building wealth. And we will see you next time. Thanks, guys.
Cheers.
Cheers.